Oil rebounding this morning from its lowest level since December of 2021. Traders weighing concerns about looming oversupply and tracking impact from Hurricane Francine, which is expected to make landfall in Louisiana today. So maybe offsetting some of the losses that we saw earlier this week. We want to bring in Tom Kloza. He's OPIS Global Head of Energy Analysis. Tom, it's good to see you. So we certainly have concerns about oversupply that had been weighing on the oil markets. Now we're turning our focus to the threat of the hurricane. I mean, exactly what that means for the energy market here in the U.S. Do you see this movement, the slight movement higher that we're seeing this morning? Have we seen a floor in crude?
Well, we're going to see a floor at some point here, but I'm not so sure it's now. And by the way, that Hurricane Francine is really not a major event. It speaks to the issue that every hurricane that makes a landfall in North America destroys demand. It's really the rare one out of 50 or so, that destroys supply. And this one, based on where it's entering, is not going to really destroy any supply. It does bring kind of a microscope to the fact that we've got a lot of deep water and Gulf of Mexico crude, including probably close to 500,000 barrels a day of additional crude coming on from those sectors in the next few years. So oil is a problem. This has been a very, very bad week for all the oil analysts, for companies or countries that are in OPEC, and for all of the entities that try to measure the temperature of crude.
And so with that, you mentioned in your notes to us, there's lots of diversity in the prices, but recent months have demonstrated some deflation in gasoline, not enough to make up for severe inflation in the cost of lodging. So, all these things considered, how is what we're seeing in the oil prices and the broader oil price action that has seen some new 2024 lows and even cracked through December 2023 lows, how's that playing throughout the rest of the areas of the economy where oil is one of the key cost inputs?
Well, here's where everyone was caught sleeping. The actual physical demand for oil in August was probably the highest month ever. The greatest, I wouldn't call it a shortage, but relatively tight supplies of physical oil. What happened this summer, and what continues to happen, is that you do not have speculators buying futures and options contracts anymore. Instead of being 10, 15 to 1 of people who are buying crude on the auspices that prices are going to move higher, you're seeing no bias whatsoever. And that's going to be something that people have to get used to. The fact that we didn't see more speculative money or more investment money come into the market when we had everything going on in geopolitics from last October 7th, that might represent a real sea change for oil. Because a lot of the price of oil through the years has been the physical market, but a huge portion of it has also been the sentiment and the positioning. And right now, financial participation in oil markets is probably as low as it's been since oil really became an asset class.
So, Tom, then what could turn the tables if we're looking for events, something like that could shift the sentiment that we are seeing, or demand here that we are seeing for crude, or maybe more specifically supply? What should investors be keeping a close eye on?
Well, I think there's a few things, and some of them have been happening. We need to watch the drones through the next few months that are being flown from Ukraine into Russia to attack Russian infrastructure and refineries. The world still needs Russian crude oil, and it needs Russian refined products. Maybe Europe doesn't get them anymore, but Europe has to get product from other places that used to be supplied. The other thing that can happen is obviously there could be tougher suppression on crude oil exports from Venezuela and Iran. That might happen, for example, on a short-term basis if we get a Trump 2.0 presidency. And then, the final thing is OPEC. I mean, OPEC has really whiffed on this one. They need to cut more oil as opposed to restore some of the production cuts that they made in 22 and 23. And right now, they're ready to pump a few 100,000 barrels more on December 1st.
It's interesting that you mention who and the presidency itself, as we're staring down a general election in less than 90 days here. ultimately many of the American public watching the debate last night here. And we were paying close attention to what the candidates had to say about energy last night. Harris and Trump certainly had conflicting views on the sector. Wanted to play a quick clip and then just get your reaction on the other side, Tom.
Sure.
My position is that we have got to invest in diverse sources of energy so we reduce our reliance on foreign oil. We have had the largest increase in domestic oil production in history because of an approach that recognizes that we cannot over-rely on foreign oil.
But if she won the election, the day after that election, they'll go back to destroying our country, and oil will be dead, fossil fuel will be dead, we'll go back to windmills, and we'll go back to solar, where they need a whole desert to get some energy to come out.
So, Tom, just help us make some sense of this and what the candidates, even as they were sparring yesterday evening, last night, which of these candidates would actually be better for the energy sector if there is a clear indicator or an either or in this situation?
Well, it's a mixed bag. I mean, whoever gets elected in November is going to be very, very fortunate in that they're going to be dealing with some of the most serious energy deflation since 2014 or since 2020. Kamala Harris is accurate in that we've seen an explosion of crude oil production, natural gas production in the Biden years. The problem is these are global markets, and globally, if you have a fairly high price of oil, which is what we've had, and you have tremendous advances in technology, you're going to see more oil come on. I certainly don't agree that the day after a Kamala Harris election that we would see oil and fossil fuel dead. I think the more likely thing is that we're going to see much more modest prices next year, and we'll see oil trade in a lot quieter terms than we have for the last 3 years. Ukraine war, the COVID lockdowns and so forth. Those are the big things that shaped oil prices in the last 4 years.
Yeah, our own Ben Workshall, our Washington correspondent, calling it one of the few substantive policy exchanges during the Tuesday night debate and talking about oil and the energy sector here. Tom, thanks so much for taking the time here with us to break down all things oil and the energy sector.
Thanks for having me.